Hello everyone, welcome to the daily technical analysis lesson. This lesson is available from ichimoku.co at www.ichimoku.co, ichimoku.co, and every day we'll be presenting a brief lesson on technical analysis. The first lesson today will be an introduction to Ichimoku Kinko charts. That's the full name of the Ichimoku system that we like to use on this website. The videos that follow this over the next few days, weeks and months will not only concentrate on Ichimoku. I don't believe that we should only be using Ichimoku in our trading and our analysis. We should be a bit broader than that. So we'll be looking at candlestick charts and why candlestick charts work. We'll be looking at trend lines, patterns, all sorts of techniques that are used with technical analysis. But firstly to the Ichimoku charts. And basically they're a trend trading charting system, and they don't tend to work too well in markets that are moving sideways or congesting. And most of the trading systems that are out there tend to be trend trading charting systems. They offer several data outputs, and we have the various indicators, and sometimes that can be a bit confusing to people, but once you understand what the indicators are telling you, then it really is quite easy to build a good knowledge of the overall market from each of those outputs. They do help in assessing the higher and lower probability trading setups. So what are the more likely trades that are going to result in a good return and a potentially lower risk? Now, a quick, very brief history of Ichimoku. And Ichimoku was developed by a Japanese journalist called Hosoda, and he was a newspaper writer. He was an author that wrote on financial markets, and this was the basis of what we know as Ichimoku charts today. Now, Ichimoku translates into equilibrium charts at a glance. There's 5 separate components, and used together they provide a whole picture of what's going on with trending price action in various time frames. So going from the fast term time frame to the medium to the long term time frame, we also get a picture of momentum in the medium term time frame, and that's why the term at a glance means that we can just look at the chart and we can understand in one chart what's happening in those various time frames. And normally we usually have to look at various charts in their different time frames to determine the trends in those time frames. Now, what Ichimoku is telling us about is actually the flow of price action away from equilibrium into a state of disequilibrium, and then from that disequilibrium back into a state of equilibrium. And the various Ichimoku indicators represent equilibrium in their various time frames. And a market, when it moves a long way away from the indicators, it represents a very strong state of disequilibrium. Moving back towards those indicators represents a state of equilibrium. And in a way it's a little bit like the way that we know that markets move from trending price action to non-trending price action, or from trending price action to congestion, and moving in those phases. And that's the way that we view Ichimoku, moving from equilibrium away to disequilibrium and then back to equilibrium. Now, the various components of Ichimoku, there are 5 of them. There's the Tengen, the Chicka Span, the Senko Span A, and the Senko Span B. Now, just looking at this chart here, and this is what really irks people who are new to Ichimoku. They look at these charts and they think, oh, look at all the information there. They just look so noisy. But once you understand what each of those components are and what they represent, it really is quite simple. So without going into more detail, and what we'll be looking at later is the components in more detail, but firstly the green line here is the Tengen, that's the representing the trend in the fast term time frame. It tends to follow price action very closely, and it's very similar to a moving average. Very different type of calculation, and shouldn't be called a moving average because it's not, but it's actually the equilibrium between the highest price that price action has reached over a period of time plus the lowest point that price action has reached over a period of time, and we work out the average of it, and that's what determines the Tengen. The next is the Kijun-sen, that's the pink line here. It tends to just lag a little bit, and it follows the price action as well, but in a longer term time frame, and tends to follow the peaks and troughs which determine that medium term trend. It resembles a medium term moving average. The Chicka Span is another very important component of Ichimoku. It's the orange line here, and it's very simple. It's basically the closing price shifted backwards 26 periods, and what we're doing here by comparing that to the corresponding price action, we're comparing the close of now to 26 periods ago. So it's a very clever way of doing it, and what it actually represents is momentum, because momentum is the current close minus the close of X periods ago, and in this case 26 periods ago, and that represents momentum. Next, the Senko Span A, and the Senko Span A is one of the two components that make up what we call the Ichimoku Cloud, and that's the line here that's always on top when we have a very strong long-term bullish bias in this market, on the bottom when we have a downtrend bias in the long-term time frame. The Senko Span B is the other component of the cloud, and it tends to perform the opposite of the Senko Span A. And here we have the cloud, the area between both the Senko Span A and the Senko Span B. Depending on which of those indicators are on top or on the bottom, we tend to color the cloud, and that gives us the very quick at a glance indication of whether one is on the top or on the other, and giving us an indication of that trend in that longer term time frame. Now, each of these indicators tend to act as very strong areas of support or resistance, and here we see the bottom of the cloud holding as support. Here we see very close to the cloud holding as support. Here within this small area here, the top of the cloud was holding as resistance. In this region here, on quite a few occasions, and this is very important, how it has strong support for this market. And in this region here, the Kijun-sen has held as support, and then we see the Tengen-sen holding as strong resistance. Now, the various inputs into the Ichimoku indicators based on 9, 26 and 52, and there has been some speculation that in the Western world those inputs don't normally work. I haven't found that. I tend to use the 9, 26 and 52 inputs. And just looking at the indicators once again, and we determine the trend by looking at the relative position of the price action in relation to each of those indicators, and that gives us an indication of what the trend is in the fast term, medium and longer term